This is your sign to stop taking financial advice from people who don't understand debt. Because every day I see people online saying things like, I stopped paying my credit cards. I'm not paying my car note. I'm not paying my student loans. I'll just file bankruptcy. I'll just go cash only. And they say it with confidence. But confidence does not stop collections. Confidence does not stop lawsuits. Confidence does not stop repossession. Confidence does not stop late payments from hitting your credit report. And confidence definitely does not stop banks from denying you later. So today, I want to talk to you about what really happens when people stop paying their debt, and more importantly, what you should do if your credit is already damaged. Because a lot of people are not broke because they don't make money. They are broke because they keep making financial decisions that follow them for years. Credit card debt, car loans, collections, charge-offs, buy now, pay later accounts, student loans, family debt, repos, bankruptcy. All of it matters. And if you ignore it, it does not disappear. It just gets more expensive. Let's start with credit cards. A lot of people think if they stop paying their credit cards, they are somehow beating the system. They say things like, money is not real, credit scores are fake, it's just numbers on a screen. And I understand why people feel that way. Because sometimes you pay everything on time and your score still drops. Sometimes you pay down a card and the bureau updates late. Sometimes credit feels confusing. But confusing does not mean fake. Your credit score may be a number on a screen, but that number can decide your interest rate. That number can decide your car approval. That number can decide your mortgage approval. That number can decide your credit card limit. That number can decide if you get approved for funding. So no, ignoring credit cards is not freedom. It is just delayed consequences. When you stop paying a credit card, first you get late fees. Then the account becomes late. Then it can report as 30 days late. Then 60. Then 90. Then 120. Then it can charge off. Then it can get sold to a collection agency. Then you can get collection calls. Then you can get sued. And if they win, that judgment can follow you for years. So when someone says, I stopped paying and nothing happened, that does not mean they won. It may just mean the consequences have not arrived yet. Debt does not always explode immediately. Sometimes it waits. And when it comes back with fees, interest, collections, and legal pressure. Now here is where credit repair comes in. If you already have credit card charge-offs, collections, or late payments on your report, do not just ignore them. Pull all 3 credit reports: Experian, TransUnion, Equifax. Look at what is reporting. Look at the dates. Look at the balances. Look at the account status. Look at who is reporting it. Look at whether the same account is showing more than once. Look at whether the debt is accurate. Because if something is inaccurate, outdated, duplicated, unverifiable, or not yours, then it may be challenged. But if you just ignore it and keep applying for new credit, you are walking into every bank with a damaged file. And then you wonder why the approval is bad. Now let's talk about the cash-only idea. Some people say, I'm done with credit cards. I'll just use cash forever. That sounds powerful, but it does not fix your credit report. Going cash only does not remove collections. Going cash only does not remove charge-offs. Going cash only does not remove late payments. Going cash only does not remove hard inquiries. Going cash only does not rebuild payment history. You can stop using credit cards, but the old damage can still sit on your report. And in a world where apartments, car lenders, mortgage lenders, banks, insurance companies, and funding companies look at credit, you cannot pretend credit does not matter. You may hate the system, but the system still checks the report. So the goal is not to run away from credit. The goal is to learn how to use credit without letting credit use you. Now let's talk about car notes. Some people really think they can stop paying their car note and keep the car. They say, the dealership is not getting this car back. They say, I took the kill switch out. They say they're going to have to find me. That is not a strategy. That is a repo waiting to happen. And once that car gets repossessed, the damage does not stop there. First, you lose the vehicle. Then they may sell the vehicle. If the car sells for less than what you owe, you may still owe the difference. That is called a deficiency balance. Then that balance can go to collections. Then it can damage your credit even more. Then the next car loan becomes harder. And if you do get approved, the rate can be terrible. This is how people go from one bad car loan to years of bad approvals. A repo can make lenders look at you like high risk. And when lenders see high risk, they do not give you luxury treatment. They give you high interest, more money down, bad terms, or they ask for a cosigner. So if you are behind on a car payment, do not just hide. Call the lender. Ask what options exist. See if deferment is available. See if you can catch up. See if selling the vehicle makes sense. See if refinancing makes sense once your credit improves. But do not just stop paying and think nothing will happen. Because the car might leave, but the credit damage stays. And if that repo is already on your credit report, then you need to review how it is reporting. Is the balance correct? Are the dates correct? Is the account status correct? Is it reporting on all three bureaus the same way? Is it being reported by the original lender and a collection agency at the same time? Is any information inaccurate or unverifiable? That is where credit repair can help. Not by pretending the repo never happened, but by checking if the reporting is legal, accurate, and verifiable. Now let's talk about taxes. I know this is not exactly credit repair, but it is still part of financial responsibility. Some people say, I'm not paying taxes because I don't like what the government does. Listen, nobody gets excited to pay taxes. But not liking something does not make the bill disappear. If you report income and then refuse to pay what is owed, penalties and interest can start adding up. And the ears is not like a random credit card company. You do not want that problem. So if you owe taxes, do not ignore it. Talk to a tax professional. Look at payment plans. Look at options. But do not treat taxes like some social media challenge. Because when the government wants its money, it does not care about your caption. Now let's talk about buy now, pay later. Afterpay, Klarna, Affirm, Zip, all of these platforms look harmless because the payments seem small. 4 payments, no big deal, split it up, pay later. But this is how people lose track. 1 payment here, 1 payment there, 3 apps, 5 orders, 10 purchases. Then suddenly they owe thousands of dollars across multiple platforms. Then they miss payments. Then the accounts get restricted. Then late fees stack. Then the debt can go to collections. And now something that started as just a small payment plan becomes a credit problem. This is the danger with buy now, pay later. It makes things feel affordable even when they are not. If you cannot afford the full price, splitting it into 4 payments does not magically make you rich. It just makes the pain smaller at first. And if those BNPL accounts go to collections, they can hurt your credit. So if you have Klarna, Afterpay, Affirm, or any buy now, pay later collections on your report, get them reviewed, check the balance, check the dates, check whether it is reporting correctly. Check if the account is yours. Check if the collection agency has the right to report it. If something is inaccurate or cannot be verified, it may be worth challenging. But the bigger lesson is this: payment plans are not income. They are debt. And debt still has to be managed. Now let's talk about fraud claims. Some people think they can go on vacation, buy things, use services, then call the bank and say, "That wasn't me." That is not credit repair. That is not a strategy. That is fraud. And in 2026, everything leaves a trail. Cameras, receipts, emails, IP addresses, text confirmations, signatures, passports, ID scans, location data. You are not as invisible as you think. So do not try to fix a money problem by creating a legal problem. If a transaction is truly fraud, report it. But if you made the purchase and now regret it, that is not fraud. That is buyer's remorse. And buyer's remorse is not a dispute reason. This is important because people confuse credit repair with lying. Credit repair is not lying. Credit repair is not fake fraud claims. Credit repair is not pretending real accounts are not yours. Real credit repair is reviewing the credit report and challenging information that is inaccurate, outdated, duplicated, unverifiable, unauthorized, or reporting incorrectly. There is a big difference. Now let's talk about borrowing money from family and friends. This one is not just about credit. This is about trust. If you owe the bank money and don't pay, it can damage your credit. If you owe your family money and don't pay, it can damage relationships. And sometimes that damage is worse because the bank might send you a letter. But your family remembers, your friends remember, and people know when you have money for trips, food, makeup, clubs, concerts, and new clothes, but somehow you don't have money to pay them back. That is not a money problem. That is a priority problem. And the same habit that makes someone ignore family debt is usually the same habit that destroys credit. They avoid the payment. They avoid the conversation. They avoid the responsibility. Then everything gets worse. So if you owe someone money, communicate, set a plan, pay something, even if it is small. Because money can be repaired faster than trust. Now let's talk about student loans. Some people say, I'm not paying my student loans. I'll just die with them. That might sound funny online, but it is a dangerous mindset. Student loans can follow people for a long time. Ignoring them does not make them disappear. There can be consequences. Wage garnishment, tax refund issues, credit damage, collection activity. And even if the rules change over time, the basic lesson does not change. Borrowed money comes with responsibility. Now, I understand student loans are a huge problem. A lot of young people were given major debt before they even understood income, careers, interest, or repayment. But ignoring the debt is not a plan. You need to understand your repayment options. You need to know what programs exist. You need to know what your servicer is reporting. And if your student loans are reporting incorrectly on your credit report, then they need to be reviewed. Late payments, wrong balances, wrong dates, duplicate reporting, accounts showing the wrong status. All of that can hurt your credit. And if it is inaccurate, you do not just have to sit there and accept it. Now let's talk about collections. Some people think it's only $179. That can't hurt me. Wrong, small collections can still damage your credit. A $179 collection can still make a lender look at you differently. A small unpaid account can still make your report look messy. And sometimes people get so emotionally stuck on the amount that they ignore the impact. They say, I have the money, but I don't want to pay. That is the mindset that keeps people stuck. Because now, it is not about the $179. It is about what that account can do to your approval power. That one collection can be the reason a lender gives you a worse rate. That one collection can be the reason you do not qualify for a better credit card. That one collection can be the reason you need more money down on a car. That one collection can be the reason your score drops under the approval line. So if you have collections, do not ignore them. Review them. Verify them. See who owns the debt. See when it was opened. See if the balance is correct. See if the collector is reporting legally. See if it appears on one bureau or all three. See if there are errors. If it is inaccurate, outdated, duplicated, unverifiable, or not yours, dispute it. If it is accurate, then you need a smart plan for how to handle it. But doing nothing is still a decision, and usually it is the most expensive one. Now let's talk about bankruptcy. Bankruptcy can be a legal tool for people who are truly overwhelmed. But bankruptcy is not a lifestyle reset button. If you file bankruptcy and then keep the same habits, you are not fixed. You just restarted the same cycle. If you went bankrupt because of credit cards, but now you are back in credit card debt, the problem was not just the debt. The problem was the behavior. If you went bankrupt because of payment plans, but now you still love payment plans because you get what you want now and pay later, that is not financial freedom. That is just a delayed bill. And when bankruptcy hits your credit report, it can affect approvals for years. So if you already have a bankruptcy on your report, you need to rebuild correctly. You need on-time payments, low utilization, positive accounts, no new missed payments, no new collections, no new charge-offs. And you need to make sure the accounts included in bankruptcy are reporting correctly, because sometimes after bankruptcy, accounts still report wrong. Balances may still show. Statuses may not update properly. Dates may be wrong. Accounts may not say they were included. That can create unnecessary damage. So yes, credit repair can still matter after bankruptcy, but only if you also change the behavior that created the bankruptcy. Now let me bring all of this together. The internet makes debt avoidance look funny, but in real life, it is not funny. Not paying credit cards can become charge-offs and lawsuits. Not paying car notes can become repos and deficiency balances. Ignoring collections can damage approvals. Abusing buy now, pay later can lead to restricted accounts and collections. False fraud claims can create legal issues. Not paying friends and family can destroy relationships. Ignoring student loans can follow you for years. And bankruptcy without behavior change can put you right back into the same cycle. So if your credit is already damaged, here is what you need to do. Step 1. Stop ignoring the report. Pull Experian, pull TransUnion, pull Equifax. Step 2. Find every negative item: collections, charge-offs, late payments, repos, bankruptcy accounts, hard inquiries, high balances, duplicate accounts, wrong personal information. Step 3. Separate what is accurate from what is questionable. If something is inaccurate, outdated, duplicated, unverifiable, unauthorized, or not yours, then it may be disputed. Step 4. Stop creating new damage. No unnecessary applications, no maxed out credit cards, no missed payments, no fake fraud claims, no new payment plans you cannot afford. Step 5. Build positive history. Pay on time. Keep balances low. Use secured cards if needed. Add positive accounts strategically. Step 6. Then apply when your credit file is stronger, not before. Because if you apply with a damaged report, the bank will price you like risk. And risk is expensive. Risk gets denied. Risk gets high interest. Risk gets low limits. Risk gets big down payments. Risk gets cosigners. Risk gets bad approvals. But when your credit report is cleaner, your options can change. Better credit can help you get better cards, better car loans, better home approvals, better funding, better interest rates, and better financial opportunities. So the lesson is simple. Do not take debt advice from people who are proud of not paying their bills. Do not let TikTok convince you that credit does not matter. Do not ignore collections because the balance is small. Do not treat bankruptcy like a reset button. Do not stop paying and act surprised when the consequences show up. And if your credit is already damaged, do not panic. Fix the file. Remove what should not be there. Correct what is reporting wrong. Lower your balances. Rebuild the right way. Because the goal is not to run from debt. The goal is to become the kind of person banks trust again. That is how you stop getting punished by bad credit. And that is how you start getting approved the right way.